Okay. Good morning or good afternoon, everyone, depending on when you have lunch. Welcome to the latest of EIFL's talks on insurance law and practice. We're trying to hold a number of these over the course of the forthcoming months, as we believe it's an area which is in need of some attention from the university, from the department, from EIFL, and indeed from people generally. Today's talk is AI in Insurance, a new regulatory focus. And the speaker is Jan Bushman, who is an international counsel based here in Hong Kong, who has a very distinguished history both in academia and in practice, and therefore more than capable of giving us a useful and insightful talk about this vital subject. No more from me. I'll pass over to Jan. If you have any questions, please use the Q&A function, and we will deal with them at the end of the talk. So thank you very much, and thank you very much, Jan.
Thank you very much, Gary, for introducing me, and welcome everyone to the talk this afternoon. The topic AI in insurance has somewhat developed from being a bit of a niche topic maybe a few months ago to something that people are very interested in now, given the high prominence that ChatGPT has all around the globe at the moment. Starting at what is AI and what is AI in insurance? Perhaps it's easiest to start with, how is it different from other technology that's being used in insurance? Traditionally, if you think of a traditional insurance program, say like a computer program, it's defined through inputs and outputs that can be documented almost through a decision tree. And obviously, AI is very different because the way it's constructed is that there is a model that uses certain algorithms, and the model is then trained on a large set of data, and then it produces certain outputs based on the inputs it receives. So it is a bit of a black box in that sense, and very different from a computer program and other technology that has been used in the insurance industry. And let me just also share the slides. Start 1 second. So based on what I've just said, the definition of AI that I'm going to use for the purposes of this presentation is essentially a computer or machine or model performing tasks that would normally require human intelligence. So what I just spoke about as the black box, that is something that in the past people would have done, the human brain would have done. And I think we all know about this in the context of ChatGPT, where we've been surprised by how capable, at least in the eyes of some, that application is. And it has certainly brought artificial intelligence to the forefront. And some people regard that as, the latest industrial revolution, the transformative technology of the next 100 years. On the other hand, you have people saying this is going to be the end of civilization. It's going to cancel out half of our jobs. So it's a very hot topic, and people have very different views on it at the moment. But in the insurance industry, actually, artificial intelligence has been used for a while, and insurers have been working on AI models, AI applications in the background. Maybe it hasn't had a lot of press, but it has happened. And in fact, even the regulators have, in the last 5 years at least, thought quite deeply about how AI should be regulated in the insurance space. So at the moment, when you read the press about, AI should be regulated, how are we going to control AI? Actually, in the insurance field, people have been thinking about these issues for quite a while, and it has been around. And so this talk is really to give you an overview of how artificial intelligence is being used and probably will be used in the insurance industry, and what steps the regulators have already taken or will likely take in the future to regulate artificial intelligence as it is used in the insurance industry. I should also say that while this talk is focused on insurance, I think a lot of the principles will also apply to other financial services, such as banks, securities companies. The issues are quite similar. So if you're not just interested in insurance, I think there will still be aspects of this presentation that would be relevant to you. In terms of how artificial intelligence is being used in insurance, I'd just like to give you a few examples of areas where it's used already, or where people expect it to be used in the future. So starting with the kind of whole life cycle of an insurance product, at the design stage, insurers are already using artificial intelligence to help them identify areas where there is a need for insurance and where perhaps there isn't yet an insurance product. So to take an example, insurers are using artificial intelligence applications to monitor the internet, to monitor social media, to see if there are activities that people engage in that perhaps are not covered by traditional insurance products. So to give an example that relates to Hong Kong, you may have seen that Hong Kong is going to allow e-scooters on the roads, I think up to subject to certain limitations. And so that could be an area where an insurer identifies that through some kind of artificial intelligence research and says that, well, actually, riding e-scooters is going to create new risks. And very few people have specific insurance for that, going out into the traffic, causing traffic accidents. A lot of people are probably not insured for that under their current set of insurance. Another example is underwriting. So underwriting in the insurance context means making a decision on whether or not to accept a new policyholder and essentially on what terms. And so in the underwriting space, insurers have been using certainly technology, and I think also artificial intelligence technology already. So to give an example, you may have heard about the black boxes that people have been using in cars to monitor driving behavior, or some people have been using health monitoring devices that are sort of linked up to different data sets. And insurers have been using it quite cautiously, but they have been using it in some areas to help them understand the risk arising generally in the population or arising from particular people. And in some instances, they have used it to help them set premiums, particularly for example, in motor insurance. It has definitely been used, and insurers are now using AI models that help them assess those large data sets and assess whether or not, to what extent a new policyholder should be accepted and on what price. And in the example of motor insurance, it's obvious how that would be done. So you would be monitoring the behavior of someone on the road. Are they typically driving fast? Are they driving slow? Do they take sudden turns and so on? And that can actually help the insurer price a product. In the health field, it's likely to become much more relevant, although insurers are still quite cautious, and there are obvious limitations around using health data, which is very sensitive, to price, for example, health insurance or life insurance products. But there are already programs under which insured policyholders can lower their premiums, for example, by showing that they're healthy through health monitoring devices, or for example, diabetes patients are able to get coverage on the basis that they are constantly monitoring their blood sugar levels. And many of these applications already use a degree of data processing or artificial intelligence. In the claims area, so when it comes to making a claim under the insurance policy, traditionally that's been submitting a paper form, and then it's moved on to now submitting a claim online. But there are some insurers that have taken a completely novel approach. So for example, in the context of car insurance, again, there are some insurers in China who have been experimenting with just being sent images of a damaged car and then using an artificial intelligence application to help them assess the likely cost of the damage or the likely cost of repair. So rather than relying on a report from a car repair, it's actually that a large data set of images and different cars allows these insurers to assess and price a claim. So it's quite interesting, and I'm sure there'll be lots of more applications in the claims field in the future. Another area is fraud detection, and I've already participated in forums where insurers have been explaining how they use artificial intelligence to detect fraud. So for example, a lot of insurers are selling their products through insurance agents, and these detection programs allow them to have a large data feed of their internal sales data to see, are agents selling to other agents? Are they selling possibly to family members or related persons? And insurers have been able to match up this data and identify agents where there may be a potential mis-selling in the sense of agents trying to get commission for insurance products that they sell, and then subsequently, for example, those products are surrendered. So essentially fraud schemes designed to get extra commission out of the insurer. And those programs have been successfully run, and agents have been identified who have been engaging in these fraudulent practices. And then finally, the area of personalization. So there are insurers that have built products where you can essentially sign up to an app, and the app will monitor, for example, if you're traveling to another country, you're taking a car, if you're renting a car, and through being connected to the policyholder in that way, that allows the insurer to personalize insurance. So for example, covering a rental car only for the periods where the car is being rented, or covering, for example, automatically triggering a health insurance for travel or general travel insurance as soon as someone leaves the country. And so the idea is that rather than buying, for example, a yearly product for travel, or buying a kind of car insurance that is just limited to a defined period, the connection with the data obtained from the policyholder actually allows the insurer to personalize the product and make sure that the policyholder only gets covered while he's actually using the objects that exposes the policyholder to the risk. So lots of interesting applications for artificial intelligence. There are many more, and I'm sure there are many more will be developed in the future. But you can see that it's relevant to the whole life cycle of an insurance product now. Of course, using artificial intelligence doesn't come without issues, and I've listed a few here that have already been identified. So one problem is if the insurer is using data set that is not very up to date or is not of high quality for the purposes of these AI applications, then this can have negative consequences. So for example, if you think about an insurer that's using out of date information about the cars, we've talked about the car repair insurance, or might be using out of date health information to price or to make decisions on underwriting, that might actually have an adverse effect, first of all, for the insurer, because the insurer may not be able to accurately price insurance products, but it may also have an effect for the customer, because if the customer, the policyholder, it receives a premium or is offered a premium on the basis of data that is out of date, then that could actually be unfair to the policyholder as well. So ensuring a high quality of data that is being fed into these AI models is very important for running a proper AI model within insurers. The second issue is around lawful collection. So as I've already mentioned, AI models rely on large data sets. And there are certain sensitive areas like health insurance, life insurance. If you're starting to look at information that people have about their health when they go to doctors, or they have information from the Apple Watch about their heart rates and all these things, clearly those things can be very valuable for insurers in determining the health of someone and perhaps the longevity, how long someone's likely to live. But insurers have to be very cautious in collecting and relying on such data. As you will know, there are already detailed data protection laws that govern what data insurers can actually collect. And that applies not only to insurers, but everyone. And particularly where sensitive data is concerned, there are quite serious restrictions. But also from the perspective of pricing, and we'll come to it a bit later, using that data is also very sensitive, because unless you can establish a clear link between certain factors and the risks and the pricing, that can actually lead to unfair treatment of policyholders, bias, and all these things, and we'll talk about in a moment. Mentioning bias and discrimination, that has perhaps been one of the biggest issues that have been identified in relation to artificial intelligence. And it doesn't just apply to insurers, it applies very broadly to artificial intelligence models. Because these processes within an AI model mirror in some ways, or maybe let's say are similar in some ways to how the human brain operates, it was found pretty quickly that AI models also become biased, just like humans do. And so, to give an example, when AI was first used for job applications and filtering job applications, it was found pretty quickly that people who have, a name that sort of suggests that they belong to an ethnic minority, for example, they were much more likely to be kicked out of the process of an application early on, and for no good reasons, or even if they had exactly the same qualifications. So AI models have acquired these kind of biases, and that problem has also been recognized in insurance. To give an example from the insurance field, if you think about a health insurer or a life insurer trying to price a premium for a product, And they're receiving lots of information, statistical information, for example, saying that particular ethnic groups are more likely, to have health issues, which is often the case, given that they may be poorer and they may be less educated and so on. And then if the AI model then links, for example, ethnic minority or sort of ethnic grouping to pricing, or even, for example, links names to particular ethnic groups and then to pricing, you can see it can very quickly happen that if there is just this black box of an AI model where you feed all this data in, you may find that if a policyholder goes on and then reveals certain characteristics about himself, the model may make certain assumptions and connections that will actually affect the pricing offered to that policyholder and may actually just be based on pure bias. And when we say bias, I mean that there isn't actually an explainable rationale for connecting the criteria that someone has offered with the actual pricing. So there are, of course, recognized areas where a particular characteristic indicates a price. For example, it has generally been accepted that because women tend to live longer than men, that this results in differential pricing for life insurance. But a lot of the other areas where similar criteria have been used are being increasingly challenged. So, for example, should there be a differential treatment between men and women for driving? Should insurers be able to distinguish based on education or occupation? And there has been a trend, certainly in the United States, to make sure that insurers only use criteria that can be sort of logically, rationally related to the pricing. And the same logic is now also applied to AI models. Anything that, if there are any inputs that result in particular pricing, there has to be sort of explainability. It can't just be the AI model sort of runs its own rationale and prices products by itself. And we'll come to this in much more detail later. But a big danger for AI models in insurance is this bias and potential discrimination. Another issue that people have been raising in relation to AI is because AI allows a lot of large data sets to be collected, that allows the insurer to distinguish between many different groups of people, being from a low risk to a high risk, perhaps. And there has been a fear that this may result in insurance being so segmented that people with a high risk will no longer be able to obtain insurance coverage. There have been a few studies on this, and so far there hasn't been too much evidence of that actually happening, probably because insurers actually do want to pool risks. They want to have large groups of policyholders in order to receive lots of premiums, and not necessarily always interested in just insuring the low risk population. But there have been some areas, for example, flood insurance in Australia, where the collection of these large data sets and the processing has resulted in some people that live in very high risk areas, which can be identified, for example, through an AI model, that they just have not been able to obtain coverage. So this is something that the regulators will have to take into account in the long term to make sure that insurance remains a pooling of risk and that people don't drop off the protection just because they're judged too high risk as a result of AI. There have also been concerns, for example, in the context of, let's say, again, motor insurance, health insurance. 10 years from now, will it be the case that people who don't provide data about their driving behavior, don't provide data about their health, will they be disadvantaged? Because insurers will say, well, we don't have enough data to assess your risk, so we're just going to give you a higher premium. That's been another concern. Again, probably not a concern at the moment, because insurers still price largely based on traditional ways of pricing. But in the future, this is something that could become relevant, and it could lead to some groups in the population, for example, older people, being less able to obtain well-priced coverage because they're perhaps not willing or able to provide the data necessary for insurers to use the AI models. Another example would be price and claims optimization. So price optimization is where an insurer prices the premium not just based on the risk, but also based on what the insurer thinks the policyholder will do on a renewal. So if you think about a typical general insurance policy like car insurance, home insurance, are typically renewed on an annual basis. And the question then is, will the policyholder stick with this insurer, or will they try and get an alternative premium, an alternative offer somewhere else? And insurers have developed sophisticated models to see based on different criteria, perhaps occupation, education level. And nowadays you might look at, I don't know, the social media profile, what is available about that person on the internet. Do they think it's likely that person will go and get an alternative quote, or will they just accept whatever the insurer offers? And so some insurers have been using that to essentially up the premium every year, because they know that person's not going to go somewhere else, whereas they have offered the same premium to some of their other policyholders. And that practice has been clamped down upon, certainly in the US, in many states in the US. It's been less of a focus elsewhere, but again, sophisticated AI models may allow insurers to do more of this. And so this is another areas where regulators would be concerned about how AI models are being used. Claims optimization is very similar. It's insurers assessing how likely someone is to challenge the claim settlement that's being offered by insurers. So again, if the insurer thinks someone is less likely to challenge, they might offer a lower claim settlement. If they think someone is likely to challenge, they might just offer what they think is appropriate to pay out. And again, that's sort of being challenged by regulators for the same reasons. And then we have something called model drift. And this is when an AI model that has been conceived at some point worked very well, was very accurate, and then something happened in the world and it becomes less accurate. And for example, during the pandemic, it was evident that some of the models that the health insurers had to assess risks became less accurate because of the pandemic. People had a lot more illnesses than before. A lot more people were dying. And so some of the aspects of the model that they were using were no longer accurate. And so it's just a reminder that there may be a danger in a model that was originally very good at drifting. And that obviously can then also affect insurers and the policyholders as well. And so I've just listed a few areas here where criteria can give rise to what I mentioned as the bias or indirect discrimination. So if insurers use certain inputs into the AI model, like these listed here, home ownership, social media habits, credit scores in the US, for example, education, they have to be very careful with that, because the AI model may make certain assumptions and connections that then result in a discrimination or bias when it comes to the outputs. So how has all this been regulated? How has it all been approached by regulators? So you can see from this list here, it really started around 5 years ago. And the MAS in Singapore was one of the first to have really detailed and actually very high quality principles on the use of artificial intelligence and data analytics. So it's called the FEED principles. And actually the presentation that we go through later is based on many of these principles. And they're actually very accurate. They're still very close to what the regulators are most lately looking at in terms of regulation. And then you will find that many of the regulation that came later was based on similar principles. I'm not saying the MAS invented this. They clearly, based theirs on research that was around artificial intelligence generally, and on other things that regulators have been thinking about. And just looking at the list, the International Association of Insurance Supervisors, which is the umbrella organization of insurance regulators, they did a paper on big data and AI in 2019. The HKMA here in Hong Kong, the bank regulator, issued letters in 2019 also. Then the US regulator at the national level, the NAIC, in 2020, they also issued principles on AI. The European Union issued a regulation on AI, not just for insurers, or draft regulation, not just for insurers, but generally. And then the European regulator issued governance principles in 2021. Most interestingly and most recently is probably the last one here. The draft AI insurance rules in Colorado, seems a little bit random, but actually a very interesting example, because for the first time, we're moving from what you can regard as principles-based regulation into very detailed regulation. So it's almost, you can see a sort of spectrum here. At the very beginning, there's no regulation or just general principles. Then you have the principles, as for example, the Monetary Authority of Singapore has done. And then at the end of the spectrum, most recently, you see some examples of actually detailed insurance regulation around artificial intelligence. So again, on this slide, I'm just sort of tracking this evolution. So before there was any kind of real regulation in insurance around artificial intelligence, there were general principles that all insurers have to follow. For example, there is a requirement for insurers to have proper systems and controls, to have appropriate risk management, and to treat their customers fairly. In most jurisdictions, there are these principles also, so very similar general principles that apply to insurers. That means that even in a jurisdiction where there isn't currently any kind of regulation on artificial intelligence in insurance, these general principles should still provide a level of protection, because the regulator can take the view that if an insurer runs an AI model that gives inaccurate or biased results, that actually could amount to unfair treatment of policyholders. It could mean the insurer is not applying proper risk management and is not having proper systems and controls. So even if there isn't currently a detailed or any kind of regulation about artificial intelligence, insurers should still be aware of all these things that I'm discussing in this presentation, because ultimately many of these can be considered under these general principles as well. So from that starting point, we then went to have principle-based regulation. As I've mentioned, the MAS and some of the other regulators took that approach. And we will see in a moment what kind of principles, the key ones here. Some regulators still haven't really focused on this area, including the Hong Kong insurance regulator. And then at the other end of the spectrum, you see the Colorado regulator has gone very detailed in terms of what insurers have to follow, and has almost put in place procedures, specific systems, specific deadlines for insurers to perform specific tasks. It's also worth mentioning that there are some areas outside insurance regulation that already heavily influenced how insurers have to behave in terms of AI models. So there are actually anti-discrimination laws in many jurisdictions that already prohibit insurers from treating people differently based on certain named characteristics such as race, gender, sex, sexual orientation in some countries. But the problem with that has been that there is usually an exception for insurance where the law says, well, if it's based on actuarial data, you can treat people differently. And so I think in some insurers' minds that has created the impression that they can do anything that is can be justified based on just looking at statistics and likelihoods. I think we've moved quite a bit on from that, in that the new artificial intelligence legislation actually requires insurers to think about whether they can justify and explain the connections that allow them to price products differently. So it's not just about saying, hey, look, actually ethnic minorities, they have a higher likelihood of getting sick, and therefore I'm just going to give a higher premium to those that belong to that group. That might be just about justified under that, under some of these anti-discrimination laws, but it's not justified under some of the principles-based regulation that we'll see in a moment. And then, of course, data protection laws, they apply broadly as well, not just to the industry, and not just to the insurance industry, but across the spectrum. And as I mentioned before, there are already rules around data collection, use of data, and in fact, things like automated processing and rules around that. Clearly, depending on the jurisdiction, the level of protection is higher or lower. But it's interesting to see that these areas, data protection and anti-discrimination, have now been drawn more and more into insurance regulation, and regulators have started to issue specific guidelines around these areas in connection with artificial intelligence. So what are some of the key principles that regulators have based their regulation on? And the MAS, as I mentioned, has issued this, the guidance around these points that I mentioned here. So fairness is one, accountability, internal and external, and transparency, explainability, again, internal and external. When I say internal, I mean within the insurance company. When I say external, it could be to policyholders or it could be to the regulators. So let's take a look what these principles mean, what the substance of these principles is. So fairness, first of all, is easy to understand. It's the idea that groups of people should not be disadvantaged systematically by the use of these AI models unless there is a good justification for it. And so as you can see here, it's the idea that the use of certain attributes as input factors must be justified based on causality. So it's not just saying, looking at the statistics, yes, something is maybe slightly more likely or less likely. That doesn't mean an insurer can say, I'm just going to price you differently. There has to be a causal link. So I think that is very important. It's probably the key thing to understand about bias in AI models. Likelihoods themselves are not sufficient in the light of this regulation. And the health insurance field is perhaps a good one to use as an example. There are correlations, there are many, many correlations, for example, between, say, genetic makeup and illness, or perhaps maybe between ethnicity and occupation and so on. But the reality is that the predictability of illness as a result of that can actually be quite low. So, for example, insurers have recognized that in the genetic field, for example, there are actually very few sort of genetic abnormalities that can they have a high predictability of illness actually arising in the future. And similarly, many attributes, for example, has someone been hospitalized before in the past? So there are many, many connections, but not all of them have a causal link. And so insurers have actually been quite careful in applying these in pricing, because they know that they have to be able to explain that. They can't just use small likelihoods to apply differential pricing to different people. So fairness, of course, has to be embedded throughout the AI model. So it should be in the model design. People have to think very carefully about, what is the input, what are the algorithms that govern that. Then there should be a degree of testing and also monitoring. And we'll look at that in more detail now. So if you think about an insurer, you have technology, a group of technology people sitting around, you have legal counsel, you have compliance people. It's nice to have this idea of fairness, but what does it actually mean? What do you do to control it? And here are just some of the examples. There is, of course, a technical side to that I cannot comment on, because there are very complex mechanisms people can use to actually deal with these issues in practice. But just to give you an insight into the types of approaches people take to deal with this fairness issue. So one approach is actually seems somewhat counterintuitive, which is to say that we're going to introduce these protected characteristics like race, ethnicity into the data set to make sure that we're not discriminating. So, for example, rather than not collecting that information about policyholders, insurers may actually want to collect that information, on race, ethnicity, to make sure that when they apply the model, it actually does not create a bias against certain groups of people. So to show that the AI model works accurately and doesn't get biased against, for example, certain ethnicities or gender, or, whatever it may be. So this is one of the techniques actually used in practice, is asking people about these characteristics and then making sure there's no biased outcome against certain groups. You can also have sample testing, someone from that group, putting in this data to see that whether or not it gives the same outcome as someone who's from a different group. And then insurers have just voluntarily limited many of the factors that they could use to price their products. And you can see, for example, here in the US, the regulators have already clamped down on many of these what's called rating factors. So essentially, these are characteristics that insurers use to price their products. Another thing that insurers can do is actually disclosing what characteristics they use to price products. Obviously, insurers are naturally quite resistant to that. They don't want to disclose that, and typically they've chosen to use more traditional rating factors so far. So those that are already quite well researched. And as I've said before, another way of ensuring fairness is using large data sets and up-to-date data sets, because only then can you have a degree of certainty that the model is going to work well. And then, of course, as I said, things can change over time. So it's very important to make sure that the model doesn't work not only when it's being conceived, but also as things change and as time passes, the model still has to work. So there has to be a degree of monitoring. Talking then about accountability, there are different aspects to that. So internally within an insurance company, the principles that I mentioned, that are mentioned by the various regulators like the MAS, the international regulators, and so on. A key point is there has to be governance. So there should be, for example, a board and a committee that makes decisions on the use of these models to make sure that it's not something that's just being constructed in an IT corner and then sold by the sales team or used by the underwriting team. There has to be a governance that makes sure that many of these principles in here are followed before this actually is being used to price products or otherwise affects policyholders. Very importantly, also there has to be an AI policy or AI guidelines, and we see in practice that a lot of insurers are currently working on that, coming up with detailed guidelines and incorporating many of the principles that I'm going to talk today, thinking about how this can be structured within the company, who does what, to make sure that these models are appropriately controlled. And then, of course, selection of staff is very important, not only in the technology team, where people should clearly be aware of issues around bias, discrimination, all the other issues. The expertise also has to be at the level, for example, of the legal and compliance team, at the board level. So there has to be a basic understanding of what AI does, what the risks are, and how they can be controlled. If you don't have that expertise, you cannot have proper oversight over these sort of models. And as I mentioned before, the governance of AI should be embedded in the overall risk management and governance of the company. So whenever a risk department assesses risks, what is high risk, low risk, they should also be aware of the risks of AI and should be able to flag these risks to the board and to other committees within an insurer. And then again, there's a large group of people within an insurer that is somehow involved in the governance of AI. As I mentioned, legal compliance, could be a data protection officer. The actuary is important because he or she has to ensure that there is sufficient causality and the explainability around how the models are being used, for example, for pricing or underwriting. And there's risk management and internal audit staff who want to make sure that all the risks arising from a model are addressed and audited. And probably many insurers are ultimately going to appoint a designated AI officer, or perhaps have a committee that is specific to AI. And we'll see later on that in the most recent legislation that came out of Colorado, they were actually envisaging a specific committee governing artificial intelligence. And that makes sense because it raises new issues. And the more of AI is going to be used in insurance companies, the more important it is for there to be a sort of specialist committee, specialist person who can deal with that and has the expertise and the experience to look at these issues. Still internal, as I mentioned, awareness at the board and senior management level is important. It's important that there are guardrails that are embedded in the models. For example, a lot of insurers who have been using AI or other technology have been using it only in limited areas. For example, if the premium payable for a product is relatively small, and there could be, for example, a manual intervention if a premium is higher or if it's a very important product. Many insurers would still rely on some level of human oversight. Testing, we've mentioned, possibly model validation by a third party. So you will see this come up in several places. Of course, the people who construct a model are going to be somewhat biased in favor of their own model. They will think, oh, this works really well. And having a third party validate this, think about the risks that can come out of that, looking at the structure, looking at the outputs, that can be very helpful in making sure that this model doesn't result in adverse outcomes. So there could be, for example, almost like an internal audit specifically for AI models within a insurance group, or there could be a third party like a Big Four firm. Maybe they would have some kind of group that is able to validate such models. And we do see evidence of that already. People using external consultants to validate the AI models that are being constructed within insurers. And of course, another thing that's very important is that there are no changes to a model that are not approved by all relevant stakeholders. So it shouldn't be that it's the IT team or the AI team that is just making these changes, thinking this will greatly improve the model, but you have to involve everyone, legal compliance, the actuaries, to make sure that all the risks are properly addressed in every change to the model. And another key area here is what happens if something goes wrong. The thing that shouldn't happen is that if something goes wrong with the model and people realize, oh, actually the outcomes are detrimental to policyholders, at that point, the insurer starts to think about, okay, do we need to tell the regulator? How are we going to deal with this? That's a bad outcome for policyholders and for the insurer. There really should be something in place that determines if there is an error, exactly how does the insurer behave? Typically, you would expect a notification to policyholders, a notification to the regulator, and the insurer shifting from an AI-based model to something more manual. So, similar to other areas where something happens, like say a data leak or some other kind of governance failure, the insurer needs to have processes in place to make sure it's able to deal very quickly with an identified error in an AI model. In terms of external accountability, this is another very important area. And there are two external parties here. One is the regulator, and the other is, of course, the policyholder. So interestingly, in the most recent pieces of legislation that came out, they do actually envisage a level of disclosure to the regulator. So saying, look, we are using these models, that's what they're supposed to do. And that clearly is something is very important for the insurers, because once they go to the regulator, that means there could be potential investigations on that. And so they have to make sure that everything, all the paperwork is in order. It really increases the regulatory expectation on AI. And I think we're going to see a lot of work in this area over time. The challenge, of course, is the regulators themselves currently have very little expertise, typically in the area of AI. So the regulators themselves have to ramp up their expertise, or possibly rely on third parties to be able to actually monitor and control the use of AI by insurers. So most likely in the early stages, we're going to see regulators relying on third-party consultants to perhaps assess certain models for the insurer and then disclose that to the regulator. And in the future, I would hope that more and more regulators will have their own teams that actually have some understanding of AI and actually, able to look more into the technicalities of these models and the issues that come up. The last point here is it's key that the insurer retains accurate records of what it's doing in terms of the AI model, how it's constructed, what the purpose is, how it's being monitored. And that's important because it may be challenged by the regulator, but also if there were ever some kind of dispute with the policyholder, it's key that the insurer can prove what it was doing. And even for internal governance, it's very important that a compliance team, a legal team, at any time has access to information that allows it to understand how a model works. And finally, the last of these principles is around customer-facing transparency. And that's quite a difficult area, because clearly the insurers don't want to disclose too much of what they're doing to policyholders. So some of the regulators have encouraged insurers to use diagrams to explain the use of AI to policyholders. And a good example of that is in the area of motor insurance, explaining to policyholders to say that, okay, if your driving behavior indicates that, then we're going to potentially increase your premium. If your driving app or driving monitoring box shows that you're not driving very well, not driving very safely, premium may go up, and so on. So explaining that, how and what kind of factors an insurer bases its decisions on, and then explaining how certain inputs influence that, could be a key for policyholders to understand what's going on, and then being able to challenge what an insurer is doing. And that is, in fact, what some of the regulators sort of looking towards, is the ability for policyholders to understand the use of artificial intelligence by insurers, and then being able to potentially challenge some of the results. So, for example, if policyholders think a premium is too high or the claims is wrongly assessed, there should really be an opportunity for them to challenge the decision that the insurer has made based on AI. There are some other things that regulators have been thinking about, imposing on insurers, things like explaining a causal link, explaining how the rating factors work, or even disclosing risks of AI to the policyholders. Those things are more problematic because typically insurers wouldn't want to explain in great detail exactly how they reached their decisions. And disclosing the risk of AI, yes, I think at a theoretical level that would be helpful, but clearly insurers wouldn't want to sort of encourage policyholders to bring proceedings against them to challenge them on how they use artificial intelligence. So to me personally, I think the more promising way of regulating is actually disclosure to the policyholder of what's going on at a certain level, and then giving policyholders the ability to interact or challenge. And that should not be only at the request of the policyholder, I think, as some regulators were considering, because that typically means that a lot of policyholders will never ask about it. I think it should be, if AI is being used in a particular area quite heavily, then that should be disclosed, whether or not the policyholder asks about it. So as I've already explained, decision trees typically not workable for an AI model. So in order to explain how a model works to the regulator or to an external third party that is validating a model, there has to be a kind of audit trail that shows all the decisions that have been made, how the model is constructed, and so on. And retention of that information is essential for an insurer. Finally, what I just talked about in terms of customers being able to challenge. Clearly, that it requires customers to understand the AI inputs and the decision. So some of the possibilities that have been considered here is explaining to the policyholder at a high level what's going on, and then having almost like a dashboard that allows policyholders, for example, on a website or some kind of app, to ask questions or perhaps give their input on what they think the correct premium should be. So that's an interesting idea, but I guess in practice, it's not easy for an insurer to do that, because if every policyholder is able to challenge or directly the outputs of an AI model, that could become quite an onerous exercise for the insurer. It may be that the most realistic way to deal with this area is to have an explanation to the policyholder that is as detailed as it can be, and then allowing policyholders who have an actual complaint or concern to raise this with a particular person within the insurer, and that is then being dealt with in a professional way. In an ideal world, of course, you would have a model that is able to kind of immediately accommodate customer feedback. And maybe that will be possible in the future. That will certainly be an elegant way of dealing with that. So finally, I want to have a quick look at the regulation that came out in Colorado, specifically a draft regulation that came out in the last few weeks. And you can see here from the length and the detail of what I've put on the slide is that this is really goes beyond just having principle-based regulation, and it's quite detailed. So they require a governance committee within each insurer that has representatives from all the different functions specifically to govern AI models. So essentially, it's a totally new committee within an insurer. Then there have to be written policies on all these things that we've discussed: design, development, testing, monitoring. So you can imagine there's a series of maybe 8 or 10 different policies, or perhaps one master policy that deals with everything that's related to AI. And as I said, this is something that insurers are working on at the moment. Then there has to be a heavy emphasis on training and supervision. As I mentioned, it's key that not only the technology team, but that the legal team, that the management, the board, they all have an understanding. And so the regulator in Colorado will actually require a supervision and training program that trains people specifically on issues related to AI and things like bias. So I think that makes a lot of sense, because training will be a very key element of making sure that insurers are actually able to govern AI properly within their organization. The reality is that very few people within insurers currently understand AI, and the risks arising from AI models. As I mentioned also before, having a written plan for dealing with any issues, with anything that comes up in practice where things have gone wrong. So there will be required to be a policy on that. And then a process for addressing consumer complaints and inquiries. So this is what I've talked about at the end in relation to customers. This may be the most realistic approach to dealing with the customer at the moment, to disclose how the model is being used and then allowing customers to make complaints and inquiries. So, it's important, and in fact, will be mandated in Colorado that the insurer has an established process for that. You may also remember that I mentioned earlier disclosure to the regulator about what AI is being used within an insurer. And the Colorado draft rules actually require an insurer to have a full inventory of all the AI models that are being used, with very detailed descriptions. You can see here on the slide, the purposes, the problems, risks, safeguards, inputs and outputs, limitations and details. So this is not just a spreadsheet that says we have the AI model called X and it's used in claims handling. This will probably be something like 30, 40 pages paper explaining in great detail how the AI is being used. And this actually allows the regulator and maybe a third-party auditor to come in and look at the model in much greater detail. And of course, collecting all this information and writing all these accurately requires a big investment in people and in training to actually be able to achieve that. You have to have people who can write up these all this information and then submit it to the regulator. There also would be an annual inventory review, and as you can see at the end, the regulator will expect a certificate of compliance every 2 years with supporting documentation. And very likely the certificate of compliance may involve insurers asking third parties to help them validate how they use AI. So in some ways, this whole regime is similar to some of the other things that insurers are dealing with. So for example, cybersecurity also moved from initially principles-based regulation to something much more prescriptive. And there are many other areas where insurers have got various prescriptive regulations and committees in place. And I think we can see with AI that it's likely that over time, insurers will have to take the same approach to the specific risks that arise from AI. So having specific governance around it, have specific policies, and having people aware of these matters. I think it will become one of these other areas of compliance that are with great emphasis within insurers. Some of the other points here we're already familiar with, so the details of testing and record of all decisions. So the Colorado regulator has really adopted many of these principles that were out there and has converted them into some specific obligations that insurers have to comply with. And of course, Colorado is here really at the forefront, but it can be expected that in the years to come, more insurers will go into this area, more insurance regulators will adopt detailed regulations of these things. So where does this leave insurers? So at the moment, there's a great divergence of regulation. Some states like Colorado will have detailed regulation. Some areas will have very limited regulation. And so for large insurance groups, you would expect that they would try and very quickly achieve a high level of compliance with these principles. And they typically have the resources to do so. But if you think about a small startup insurer in Hong Kong, for example, they typically won't have the resources and the staff to achieve all this. So it will be interesting to see how it grows and how insurers are able to adapt to such a new regime. And you will also see huge discrepancies across geographies. If insurers were to ask me what's the best approach, I would say, for a larger insurer, it's obviously crucial to build up that infrastructure that allows them to comply with this regulation, which includes having the right committees, having policies in place, having training. The more of these things they do now, the better they will be able to comply with all that regulation in the future. But of course, that's not realistic for some of the smaller insurers. And what we also see at the moment is that insurers would currently try to avoid relying too heavily on AI in areas where this may be challenged by the regulator or by the policyholder. So I would say overall, insurers are still quite cautious in using AI in those areas that are customer facing or where it affects, for example, the pricing or the decision on whether or not to underwrite. I think in the future, what we will see is at least large insurance groups will probably have some kind of hub globally that will specifically be able to deal with the development and governance of AI models because they will have the relevant expertise, but they will of course have to work with local teams that can make sure that the relevant approaches comply with local law. And as I said before, I think that at the initial stage, at least, there will also be a heavy reliance on third parties, experts, consultants that will help insurers develop and govern these models. I think in the next 5 to 10 years, this will be one of the hot areas of insurance regulation, probably financial services regulation more generally. And as AI develops, I'm certain we will see a lot of more detailed regulation. But I think the principles that we've talked about here are sort of the foundation for many of these pieces of legislation. And I think for insurers to comply with what we've talked about today, will already get them to a decent level of compliance and protect them against many of the challenges and risks that arise from artificial intelligence. So we've reached the end of the presentation. So I think, unless Gary, you want to do it differently, I think we can take some questions now.
No, that's fine, Jan. Thank you very much for that talk. Jan, can you see the questions that have been asked?
Yes, I can just see them.
Okay,
Yeah.
well, I'll let you choose which ones you want to deal with. I've got a question, but it can probably wait. So by all means, please answer which question you'd like to answer.
Yeah. So one of the questions was, how is liability ascertained if models amount to a black box and are prone to model drift? I think at the core of that question is clearly looking at the relationships that you have. So, for example, if an insurer makes a decision based on a model, and that decision has negative effect on policyholders, I think you have two aspects here. One is, of course, the regulatory liability in the sense of a regulator may actually come after the insurer for something that goes wrong. You might also have the policyholder, if they're able to establish something, for example, under the policy or if they can say that based on how the insurer has explained something, they assert that they've been some kind of contractual right or maybe misrepresentation. Would the people who construct that model also have liability, perhaps to the insurer? Yes, probably. I mean, it's possible, and clearly it depends to a large extent on the local law. But yes, I think these are all the issues that would be looked at, and it's clearly something that insurers would be concerned about their liability in relation to all these things. And I think one of the questions is actually just the administrative one, which is, will a copy of the presentation be shared? And I believe it will be on the website. I think that the whole presentation, in fact, is being recorded. Is that right, Gary?
Yes, the session's being recorded, so people can watch this maybe in a few days' time once we've put it on the link on the Eiffel website. We usually put a link on there, and it goes into a YouTube video. So my talk I gave on COVID-19 cover a couple of months ago, that's on there too, and as are many others. So you'll be able to see the slides again on there. And yes, we can make the slides available in a link on the website as well.
So I think no further questions here in the chat box. So Gary, I think you can ask your question.
Well, I was going to say it's a more of a broader question. It might be that this is too much of a sort of academic question, but this has struck me as I've looked into these subjects, is that does the growth of regulation and the need for regulation, and perhaps the accessibility of regulatory solutions for consumers, is it displacing the courts and the law? Because going to the courts is expensive. It can be very time consuming. You can bring a claim or a complaint to a regulator, and provided that regulator has some means of giving some sort of recompense to the customer, they're going to do that. Do you think this is the growth of AI is increasing that trend from traditional black letter law, people like you and me arguing in court, to simply people going to regulators and seeking a resolution there? Bearing in mind, when you think about it, and I go back to what I just said about COVID-19, the biggest case on COVID-19, insofar as any common law jurisdiction is concerned, was FCA and Arch, and that was brought by the FCA to determine what the answers would be from insurers if people did come to them with claims for cover for COVID-19 related losses.
Yes, I do think that it will. I do think that these issues will be primarily resolved either with the insurers themselves as part of a complaints procedure, or then at a higher level by complaints to the regulator or maybe some other institution. You may know that Hong Kong already has an institution that deals with complaints about claims, or the handling of claims. And I would envisage, I think this would be something that can be resolved best in this kind of forum. As you say, the threshold for a consumer to bring a claim in court based on an AI model would be very high. Very few consumers would do that. I think the regulator should mandate that insurers process complaints in relation to AI models in a particular way, and have the ability to complain, either to a third-party institution and or to a regulator about this, because clearly this is something that's going to affect consumers. So they should have a cheap and easily accessible forum to resolve these disputes. So I completely agree with you. I think this is certainly another area is best suited to dispute resolution outside the courts, and I think will result in the regulator having to deal with certainly more complaints. And I think rightly so. I think it should be something that the insurer itself or the regulator deals with. Of course, within the capacity, the regulator has limited capacity, so that's why I think there'll probably be a use of third-party, some kind of third-party, mediation or whatever you want to call it, as well.
Yeah, I mean the difficulty, of course, with the regulators at the moment is that they have limits on how much recompense they can order an insurer to provide, but that's something that could be argued about. It's higher before the financial ombudsman in the UK than it is here, but even there, it probably wouldn't be of any use to very big corporations. But then again, the big corporations could probably still afford to go to court. So from the point of view of small consumers who may have lost, say, tens of thousands rather than hundreds or millions of thousands, yeah, that was my thinking anyway, that we're seeing the courts become more and more irrelevant because they don't move quickly enough and because they're expensive. Whereas regulators, for all their faults, can move much more quickly.
I think that's right. And I think regulators issuing more detailed guidelines is probably the best way to protect against those, claims or complaints arising in the first place.
Yeah.
And in fact, insurers adopting these principles now will probably avoid a lot of the issues that can appear down the line.
Yeah, I agree. Anyway, it doesn't look as though we've got any more questions, which is a good sign. It demonstrates that Jan has covered everything that could possibly be covered, apart from tedious academic questions like mine, but then they're tedious academic questions. So if there is nothing else from the audience, usually, of course, we ask people to express their appreciation of the speaker by clapping, but perhaps people can just click the raise hand icon on the Zoom system if they wish. I will applaud, however, and just say thank you very much indeed, Jan, for that very interesting talk.
Thank you very much, Gary. It's been a pleasure, and thank you for the interesting questions as well.
Thank you very much indeed. Okay, thank you very much, everyone.
Thank you. Have a good day.
Thank you. Bye-bye.